It's Friday and time for another weekly wrap. This actually was a fantastic week for trading. If you remember last week, I was looking at a couple of points for potential breakouts. One down here from the prior week's low and one up here for the prior week's high. Now, what wound up happening this week was an inside bar. And you can see that this week's trading was completely contained by the prior week. Now, this, in my opinion, can go either way. Some traders tend to think that inside days are bullish. Other traders think, well, it's really bearish. At this point, what this is showing me is that there is still a disagreement about price direction. You can see the price is not breaking out, but that's really been the case over the last several months. I mean, look at this. Back in December was the last time the market had really had any kind of trend run to it. In other words, there was a disagreement about price. Look at this. Back in October, the pound was down around 8,500 level, and by the beginning of December was up here at the 9,800 level. So big move, and what this equates to is a very large disagreement over price. So all throughout the last several months in this area, there has been a general consensus about price. In other words, the pound is not worth more than 98.10, and it's not worth less than 93.20. So we just have this enormous range that the market is wanting to trade inside of. Remember, this is a 500-point range from the top to the bottom. So what does this mean as far as strategy? Well, I really think when you start building this kind of pressure on both sides of the marketplace is when you can really set up for a nice move to the upside. What I was talking about to my members this past week was this resistance line coming down from the mid part of January, late January here. You can see this. Plus, we've got the market building potentially a support line here. Now, if you've been a student of technical analysis for almost any length of time, you can see that this is a triangle. Triangles can be a continuation pattern. In other words, the market may continue the move that came into it, but you know, that's not always the case, and it could be that the market pushes out and then continues to go down. Here's one thing that in my experience, I have seen. What I've seen over the years is that when the market trades deep into a triangle, like this market has, you don't, generally speaking, see a huge move. In other words, I'm not going to look for the market to trade necessarily this entire opening of the triangle. So let's dig in here and take a look at some of the intraday boundaries that we might run into, or some of the logical points. The first thing that I like to do is zoom way out. In this way, I don't see a lot of the detail in the charts. I can see the highs. I can see the areas where the market consolidates, but that's about it. And really, all I'm looking for here are areas that really stand out to me. And I see a couple that are very easy to find. I think that we're going to run into a range here, which is, as you can see, is about 9,500 up to about 9,570, right in this area here. And I see another area here running across these tops. Now, basically what I'm looking for